The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon. Of course, today I also did Larry's show, so it was a pleasure being there for him. He'll be back tomorrow. Looking forward. Oh, man, have we missed him? Larry! So we're looking forward to seeing Larry again. And most importantly, I'm just giving you the notations here on the 2-minute E-mini in case I forget. Had a very nice peak F right there at 9:30, just after 9:30, at the 2404.50 all-time high. Pulls back very sharply, goes down to 2393.75, trading now at 2397. I think we're looking at a lot of pressure on the upside in terms of wheel spin. Look at the Qs, made an all-time high at 139.44, trading at 139.30, down a full 14 cents. Huh? Can you believe it? Okay. Most importantly, this is leg E. The MACD is becoming extremely stretched. Doesn't mean to say that you have to have a crash or anything. It just says upside could be a little bit limited right now. Stochastics at 96%. Excellent, but it's gone on for a long time. And I have two indicators that are suggesting that we're getting close to some kind of reversal. Number one is where you've got a leg F at highs in the unbalanced volume in the daily chart, and you've got the faster moving average hinting that we could be pulling back within 2-3 days. Could be 2 days. Weekly chart price-wise, fabulous move. MACD is good. Stochastics 98.45%. That's $1.55 off 100%, which it never reaches. So this is really extraordinary strength. But it is it's the right side of an M formation, lowercase m, lowercase h goes to lowercase m. At the same time, relative strength is good. So there aren't many signs in the weekly chart to say that there should be a pullback. In the monthly chart, this is a 120-minute chart, leg E, MACD just crossed positive, but it's still actually quite weak. The stochastic is very strong at 90%, but the unbalanced volume is suggesting that if there is a move in the QQQ below 139.12 by 3 o'clock this afternoon, we could see a very weak close. If it holds where it is right now, it's just another day in sunshine land. That's all that we can say. Now let's go to this. I want to move that away. So this is the daily chart. This is the weekly chart. This is the monthly chart. Right here, we've got the 120-minute chart. I can't even remember. Did I just do the E-mini? E-mini, yes. E-mini made a nominal new high, 2404.50 today. That's after the May 6 high was May 6 at 2403. What we're looking at is this H pattern that is sometimes a double top. Let's see what happens here. The weekly chart, MACD, hasn't yet crossed positive. It could deflect lower, but it only deflect lower if the E-mini at 23.98 right now, down 75 cents, closes either today or tomorrow under 23.90. 23.92 is the 9-period moving average. I want something below that. Actually, I really wanted below yesterday's candle's low. So 23.88. That's what I want to see in the next 2 days. The move below 23.88 says, uh-oh, that's the first big chink in the armor. Chink in the armor. Okay, and it's made a peak E in the 120-minute chart after a long-legged doji candle. That's usually, I have to wait for the candle to close. If it closes underneath 2399.75, that's exactly where we are right now. If it closes, no, that can't be right. If it closes under 2402, what am I talking about? 2399.75, and we are at 2397.75. Okay. If it closes under that 239s area, that's going to be a big negative. And look at the stochastic failure pattern, MACD failure pattern. We'll see what happens. Day is young. That's all I can say. Okay, I want to run the numbers now because there's a lot to go through. There we go. So we did the QQQ. We haven't done the S&P cash. SPX cash has just made a nominal new high for the second time in a week and a half, actually, a week and a day. And it's gone to a leg F. SPY, I want to show this because the SPY has also gone to a leg that's very important, a leg E. MACD is just starting to turn down, still good. The stochastic's down under 80%, not so good. And now let's go to the IWM. I was asked about that. IWM, very ugly candle, down 50 cents at 130.08. I think it's not. I think the IWM is telling us that my contention was that we've got to be aware that the Nasdaq could be rotating through highs as the Nasdaq leads the S&P, made a nominal new high, and maybe it'll drag the Dow up and then drag the IWM and then the New York Stock Exchange. I just don't see it. I see it the other way around, because when I look at the individual charts, I mean, look at this. UTX in the Dow made a peak at 121.95 on the 9th. It's at 121.14. It's kind of struggling here, but it's not breaking down, but it isn't really breaking out. It says to me that maybe UTX, one of my Dow Quartet, and Triple M, which have been the leaders lately, have made their tops just most recently, 199.90 for Triple M on the 5th, and now it's at 197.43. Really working hard to try to maintain that upward mobility. If you look at IBM, yeah, there's a little bit of a bounce. I was asked about that. Is this a low of a tradable low? I don't think so. I don't think IBM is going to make a tradable low until it retests. If I see it in the gap and it's trading at 155, I'm just going to have to shake my head and say, you know what, I'm at 6 points in the Dow. It's acting in IBM, it's acting very well. I just don't think it's going to do that. And if you look at GE with Immelt adding 150,000 shares at $28, I would have to say that nearly 500,000 or whatever it is a problem, because what am I saying? 5 million. What I'm looking at here is that even with this, it's down 7 cents. This is just not a good omen right now, GE, unless it's just in its own independent world. But I think it's telling us something about the overall cyclicals, and we'll see soon enough. So let's go through to the New York Stock Exchange, NYA.X, trying to make a leg D. Above 11,653, it's down full at 11,610. Not bad. It's holding well, but it's only holding well. It's really not breaking out. The monthly chart still peak C, peak D in the weekly after 11. This is the 11th week. Hasn't been able to break above. All it had to do was break above 11,687.07. Hasn't been able to do that. So that's that. Now we're going to go to gold. Gold right now. Oh, now gold is up $8 at 12.37. Nice. One of the reasons for subscribers to my opening call, why we started position in a gold stock, is because I think that there's going to be a political or an external, something's going to happen over the next day or two. From the way the market's looking, it won't come from the market initially. It will go into the market later if there is a very sharp pullback. But I think it has to be an external event. And gold might be saying that it could be an external event. Basil Chapman, Tiger Technicians Hour. Dow's down 1, S&P's down 1. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So here's that little bounce that could take it to 2399. The E-mini, it's at peak C right now. On the this is a 2-minute chart. The 10-minute chart has a slightly different picture. If you look at it, you see the stochastics turning down. MACD is good still. So we're going to see if there's pressure, selling pressure comes in again. What I said to subscribers this morning in my opening call, I showed this chart right here. It's one chart, but it's got two views. This is the Dow 120-minute chart. And what I'd said is I'm expecting that there'll be a Chapman Wave 4 slightly down, and then we'll push higher above the 20,000, if I can actually read it, can't read it. I think it was 20,090 area. And then we should see a sharp pullback in Chapman Wave 5. And then would be like a peak C minus, as it was a peak C minus in the Chapman Wave 5 right there. And there was a stochastic was in the 90% area, which is good, 92%, I believe. And the MACD was crossing positive, but there's this Chapman Wave falling axe pattern in the 120 minutes from the 1st of March high of 21,000. No, that was not the first. That was the second high, and that was 21,070. That was the most recent one. And then you've got your declining highs and much lower declining lows. That's got that falling axe pattern. I anticipate we could get a bounce to that line, but we should not get a bounce above 21,000. I think it was 40. Was that the number? The left side, that peak C minus. Okay, this is the reality. This is what happened. We got the pullback, ready to go, right here. We got the pullback, right, 120-minute chart right here. We got the pullback, spike to 5, peak C, and now pulling back very sharply and hit the 9-period, under the 9-period exponential moving average. And here's the MACD flattening out, and stochastics way down at 57% right as we speak. So that's what I do for subscribers. I give them a that's the daily chart, gosh. This is the one I wanted to show. And the stochastics pulling back. Now it's at 83%. So we'll see what happens. There's that line, and I drew the arch formation right to the line. Okay. So far that's working out. Here's the daily. It says that it should be a failure pattern. And here's the daily right here. So I showed two dailies as well, one without the MACD and stochastic, one with the 9-period moving average and the 20-period moving average, that red line, which is very important in the bigger picture. And what we're looking at here is that there's a Chapman wave 4. This theoretically, now there's a lot of buying pressure still, but theoretically, we should see 20,891, the 20-period exponential moving average tested by tomorrow. Hey, famous last words, but that's what I'm saying. We'll see what happens. Okay, now let's get back to our story. Let me see. Just quick questions. Yep, I did the IBM, S&P, and weekly. Yeah, so there's a good statement. Well, I was saying gold. Gold is acting quite well here. This is a good leg A up with the stochastic at 20%. I want stochastic higher than that. What's really important is that the MACD has to cross positive, and it hasn't yet. So far, I'm still calling it retracement failure mode. It can fail. This is just an explanation. It's not saying it's going to fail, but it's called a failure mode because it's way under the previous high, way back at the almost 1,300, way back in April. Okay, so that's it. And I've got 1245 as a 9-period moving average, and the weekly has really important resistance. If you're looking at crude oil, where did that go? Oh, I wonder why it doesn't automatically migrate to the chart that I'm looking at. All right, here we go. Crude oil. Crude oil is, in fact, stalling a little bit. It's down 6 cents at 48.79. It's gone to a leg C. And what I said yesterday is that 9-period moving average in the weekly of 49.50s, it's going to take quite a challenge to push above it. I think there's a glut of oil, and the monthly chart says glut of oil. So crude oil, I don't think it's tradable right now. More importantly, I think it's going to be a short again very soon. SCO should come into focus. Maybe give it another day or two. Here we're looking at silver. I forgot to do silver. Silver's acting well. It's up 14 cents at 16.75. Not great, but it's a good start to try to recoup some of the losses. And I'm suspecting that it's the 17s that's really going to be the challenge. Can it hold it? Can it get there and hold? Or will it fail and go back to 1630 very quickly? We're watching this really closely. Now, if I go to bonds, when I did Larry's show earlier on, what I said is the pattern, the lowercase h that goes to an M like the weekly shows, that is devastating. That is just so hard to break. And the only thing that would break it is a move into the 156s, and it's at 127. So it's at 152. Another 3 points higher would be spectacular as yields come down. I think that if the market is going to start to pull back, you won't see anything until the TLT at 121.68 is really pushing above the candle of the 5th, what was that? Of the 3rd of May, 122.39. It has to get to the 123s. This is like bonds. It needs a big move up to be able to change this arch formation, the lowercase h that goes to a lowercase m. That's the schematic I drew ages ago. We'll see. I just think that the yields are in a trading band at this point. TNX.X, look, pulling back. I call that a phantom peak. When I did Larry's show this morning, I said that almost everything about it says I should call that a phantom peak. And if it goes higher to a real D, that's fine. But right now it looks like it wants to pull back. And that's the 10-year yield at 23.15, 2.315, down 23 cents, 23%, 0.23. And now what we're looking at is the yields look very much like they would like to test the 2190s or 2220 to 2170 area right there. We'll watch it closely. And at this particular point, if bonds start to rally strongly, that's when I think the Dow is going to have the market itself is going to have a deeper correction. XLF, a couple of people asked me about that. I don't see anything yet. And until yields really start to move up, and it's not just an expression that higher yields should be beneficial to the regional banks and most of the bank in the bank sector. I think it's a trend that we've seen that when the yields go up, you see the financials do better. And as long as that trend is in place, I think that's what we're going to look for. And right now, they stuck, the same as the yields are stuck in a range. So I don't see anything yet. Goldman Sachs is my bellwether, Bank of America and Goldman Sachs. And Goldman Sachs says stuck, 224.96, down 16 cents. A break below 222, a close below 222, very negative. And a close above 227, 227, would say, hey, I can move a little bit higher. But I think it's going to be a bellwether for us when it finally makes a decent low. And Bank of America is higher up consolidation, still consolidating at $24. Okay, I think I've covered most of what I wanted to do. Bonds, gold. Oh, the VIX. Now, let's get back to the VIX. And a couple of people asked me about the VIX. I spoke about it during Larry's show. The VIX at 10.41 is saying that there's support. It doesn't just say that there's buying pressure. It says that there's support. Because if it holds underneath 11 and it hasn't been spiraling to the upside, all it's saying is that is buying pressure to give support, but it's not buying pressure to break out the Dow, the S&P, the New York Stock Exchange says it's just support. I can tell you this, that if it has to break into the 1020 or 980 area, I think you will see an 85 or 100-point move in the Dow. I don't think it's going to do that. But if the VIX index closes the day anywhere near 1065 or higher, you'll see the
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I had a question while I'm busy doing all these charts during the break about Vodafone, VOD. Vodafone, Peaky and the Dan had it for a while, and he asked me about it. And I said that, if I remember correctly, what I'd said is it's acted very well. It's kind of a name from the past. It keeps showing up and then it just disappears because it had a major decline over the past couple of years. And it was making a cup formation at the 200-period moving average at 27 at the time. I think it was just 27. Now it's 27.18. looked to me like that's going to be key, and was at a peak D, and or it was getting close to it, and I said, if you're in it, I'd hold it, but I wouldn't add to it. Well, that was a mistake, because why? Gapped up today. It's trading at 28.67 in leg E, and that makes the whole area of the 200-period moving average between, I'd say, 27.20 and 26.80, where the 200-period smooth moving average or simple moving average is. That makes that and the 9-period moving average of 27.40. That makes it really good support. So the question is, would I add to it? And I'm just going to say, it's in leg D in the weekly, leg B in the monthly. I think I would add to it, but I'd have to give it about 4 or 5 days. I'd give it to maybe Wednesday a week, somewhere around there. Let's just see where it pulls back. We might just find that the market is pulling back, and Vodafone has had such good results that it's holding well, and it hasn't broken 28. It's 28.67. We'll see. But in the meantime, congratulations. You know what? I wouldn't add to it here, because I don't want 2 points down to take away from my good gains. I'd rather keep the good gains and add to it lower down, and then have 2 positions. One is if it gets on by Tuesday, today's Tuesday, a week's time. If it closes any day under 27.80, I'd wait a little bit longer. If it's holding above 28.03, just above the round number 28, it hasn't broken, it's gone below, but it's holding above that. It closes above 28.03. I'd say to you, you know what? You can have a tiny little position that you add to, kind of like a pilot light, forgetting all about your original position, which looks very good right now, and then I would add to it. So, yes, in other words, great move. Have patience. I'm looking at this and saying it's in an area, Vodafone, it's in an area that's been disastrous, and it's done very well. So something's going right there. So it's one that I think is good. And if it's paying a dividend, that's even better. Therefore, if it's paying a dividend, I don't want to be buying at 28.67, even if it goes a little higher. Why? I don't want to risk 2 points. I don't want to risk 8% or 6% over a smaller dividend. A smaller dividend than 8%, that is. So, okay. Then where was I? Let me just go back to this, because I've moved so many steps away. Yes, the VIX index. So let me just finish up here. So the question is, looking out, what do I see for the volatility index? Now, I have to say that within the context of chart formations, the plummet from peak D, I should actually now put an up arrow as my first up arrow, and I don't know how long in a weekly chart of the VIX index, because it went to a D, a buy mode, and then it failed and it's come down to a lower low. So here's the question. Is this an E on the way down or an A? If it's an A, you're going to go BCD in the weekly chart. Now, what I'm thinking is that the VIX index in the low 10s, in the 10.5 to low 10 area, if you take one of the instruments, that's very different, like the TVIX, the VXY, whatever, UVXY. If you take any one of those, that's just a completely different instrument. If I'm looking just at the VIX index, the volatility index, if it didn't have that kind of move that the doubles and triples have, if it was just 1-to-1 and there was such a thing as the VIX that I could buy at 10.46 and hold, right here, I'd say your risk is 10%. But over a 5-week period, I think you're going to make 30 to 50%. Hey, that's my thinking, but there's nothing you can trade like that, because there are only doubles and triples. So my answer to the question is, where is the VIX going? I believe that over the next 5 weeks, that you're going to see a VIX that hits 13.5 to 14.5 at some point, and it could be higher. That's the way I'm looking at this in terms of chart formations, having gone to a lower low, having gone to a 9.56, which is a fraction above the all-time high, which is in 1993 at 9.39. Oops, no. 2000, that was 2006. That was 939. I think it was 931. Yep, 931, November of 1993. Is there a chance you can go to under 1931? Now, of course there is. If there is a sudden move and all of a sudden that rotation that says NASDAQ all-time high, S&P all-time high, let's get the Dow all-time high, the IWM, and then the New York Stock Exchange, and then we can have an even more major decline. I don't think that's in the cards right now. That's my thinking. That's the way I'm looking at it. If I go to so many of these stocks, let me just do that right now. Let me grab this TAL. Remember TAL was remember BEAT was number one in the Investors Business Daily? Absolute deed, hit around number 34. It's trading at 28.58. TAL took over. TAL took over. TAL Education Group took over as number one. It made an all-time high of 128 something, 128, round number 128. Did I forget to put that in? I mentioned, then I forgot it. 128 round number high, all-time high. It slumped down to the 119s and now it's bouncing back to 125. Wow, what a volatile stock. It's up 4. I'm watching this real closely because yes, there could be a leg D in the weekly chart, but I think it's getting real close. The action over the last 3 days is suggesting to me that it's starting to get a little tired, and we're going to watch it because if TAL Education Group Chinese After School Tutoring breaks under 119 over the coming 2 weeks, I think that's it for this stock, as at least in the short to intermediate term. Let's look at the next one, which is Lam Research, LRCX. Made a new high at 151.50 peak F. I don't know if this is going to be a G or if it's recycled, and this is actually a brand new F/C, A, B, G/C, a G/C in the daily. But you see what happens when the MACD turns down? There's enough residual strength to say, yeah, you can make one little pop to the upside if the stochastic's over 80% and it's at 85. And that's what we're seeing play out now. So we're getting really close. You've got a doji candle from last week, and so far you're above that high, the doji high of 151.50. We're at 151.65. Hey, let's see what happens Friday. I think we're getting really close to the semiconductor index starting to pull back. What about ANET? ANET is Arista Networks, Inc., A-N-E-T, ANET. Leg E, and it may be the end of the run. We'll see. Watching it real closely. We've got a little break coming up. Basil Chapman, Tiger Technicians Hour. Dow's down 5, S&P's down 2.5. We'll be right back off these very important messages. A couple of questions came up, and I'll answer them when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, so the 2-minute E-mini chart, there it is, gone to the peak D. It we always look for. It has that 200-period moving average. This is going to be really important. Closing out of 2399.25 would be very good. But just being repelled from that area says, this rally is not going to hold. Okay, so where was I? In the break of, ANET. No, that's LRCX. ANET is Arista Networks. Is that what it's called? Yep. Making a leg E at a high of 148.60. Gosh, so many 140s, 150s, 160s stocks. Okay. There's this doji candle in a potential leg after the upside, or it could have recycled F/B. Most importantly, if there's a close on Friday with a candle like this, and the next week the low of 146.10 is taken out and it closes below that, that's a hint to say, be careful. ANET. I mean, I could just keep going through this. Cognex, CG, and X. Another stock making a peak D. There are just too many of these Ds. Weekly charts are still strong mostly, but the dailies are really becoming overbought. That's really what I wanted to point out. So a question about NKE, that's Nike. I said that has almost certainly made a hat-trick top. Remember way back, Nike Inc. V Sports Apparel, 52.70 down $1. Made an all-time high at 68.19 December of 2015. I said, no, to me, this is a hat-trick top, and this is a hat-trick top. I don't think Nike's coming back soon. Yeah, it's looking poor. It's gapped down today. Not good. What was the question, actually? So Bob wants to know a wave count. Let's just do what I've done. I don't know if I've got Dix. I always do Dix, and then I lose it because... yeah, I've lost all that information. Oh, my God, what a horrible chart. What was the last one on the daily? The daily was peak, look, peak A, B, C, D, E. Peak E and then kaplop. I remember this so well. I discussed it, and it was maybe at the last earnings 3 months ago or something, and it was a very unusual chart pattern to have broken down like this and then made a new high, A, B, C, D. Look at this. It had a full wave count, Chapman wave count, and that was such a surprise to me. I hardly ever go into Dick's Sporting Goods. When I do go, I'm kind of overwhelmed with all the stuff. You really got to know what you want. Okay, and there's a peak D. Oh, man. 40 goes from the 60s into the 40s. Not good. Very ugly. I mean, it's more than ugly. It's devastating. I mean, how are they going to keep their stores open if this is what's happening? All right, so back to our story. So that's Dick's TJX. Now, TJX is just one of the most magnificently run stores. It's got TJ Maxx, Marshalls, Home Goods. I mean, really. You go to a peak E at 83.64 in the monthly, and now it's got the pattern that says, hey, there's a 1-to-1 to the downside. And a gap down today, down 254 at 74.34. Oh my, this is really ugly. No, this is not ugly. This is devastating. I don't know how this is going to resolve. I don't know, but you cannot have Macy's, one of the best run of all the companies in that whole area of retail, just plummeting from the 70s down to the 22 area right now. It just, something is, we're going to pay for this picture, and we're going to pay in our pocket, and we're going to pay because of choices. I mean, I don't shop Amazon at all. Everybody says Amazon. I hardly ever, well, I don't actually shop very much at all. Just not a big shopper. All right. But if I do buy things, and I do go to Amazon, then I buy, silly things like a little mouse, the kind of mouse that I like, very tiny little miniature mouse. It's things that, tennis balls. I mean, just, not tennis balls, I get that locally. But the strings, my hollow core strings for my tennis racket, which they don't stock anymore, I guess is a vintage type of thing. It's fabulous strings, hollow core it's called. I have to get it online. So there are very few things I get online. But others are there all the time. And I don't know how it's going to impact the malls, because if you're looking at SPG, look at this, SPG, which is one of the, to my knowledge, I don't really know, I just know what I've read and heard. Simon Properties Group, they are have been always one of the very best. I think they have the Chestnut Hill Mall. They have a whole bunch of the malls around here. And goes from 229 to 155. It's down 64 cents today, just a straight line down. Had three troughs since its high back in July or something of 2016. This is not good. This is horrible action. So I don't know how it's going to result. And I don't think the stock market's going to appreciate it. At some point, the stock market's going to say, hey, things are not that great. Let's look at the housing sector, HGX. Leg F in the weekly, leg F/C in, I'm calling it really C in the monthly, and it had a big move up here, A, peak A, and it could be an alternate count. So this is really, yeah. So this is E/B, and an F/C, and it's at the low of the day, towards the low of the day, 273.44. This is the Philadelphia Housing Sector Index. The daily says it better hold up here, because if it goes under 270 in the next week and a half, it's done for a little while. And I'm calling it, at least for now, I'm calling it leg F in the weekly. So yeah, housing sector. So we'll look at that. Next question I had was Disney. Disney is trading, down $1.13. We were short. I've had some silly moves lately. I've had some really good picks, and then just been stopped out, and then the darn thing is done either up or down to what I wanted. Look at this. We were short at 114.21, took a 2-point loss. It just got stopped out at 116.10 was the all-time high. I think our stop was just below that. And then kaplop, it's down at 108 right now. 8 points, well, 8% is not such a big deal, but it's really the fact that it was a peak F in the weekly chart, and that was saying to me, watch out, Disney. This is not good. Gosh, I wonder what Six Flags is doing. SIX, I used to have this all notated. Nothing, not a single note. Oh, well, it's in my other file. All right, I want to do it from here. Six Flags, A, B, C, D, E. They always have a pretty nice run in the summertime. Pulling back a little bit in this rectangle formation at 61.92. Unchanged right now, 61.92. Made a high just a couple of weeks ago. The 28th week of the 28th of April at 65.19. Yeah, got to watch that real closely. I just think it's chop, chop, chop. I think it's gonna have a nice rally at some point fairly soon. It's on my list now. IYR, of course, we have to go because of the SPG. Simon Property, we have to go to the IYR. That is the United States REITs ETF, a trust. It's the iShares Dow Jones US REITs Index Trust. These are commercial properties, SPG, AMT, CCI, PCA, just a whole bunch that you're probably familiar with. Venado. Wire houses here. Oh, okay. I don't know if it's still there. They had changed a little bit. Yeah, it's just kind of stuck. I'll just make it real clear. Made a peak D in the weekly. It's under, like the dollar was underneath that trend line. This is under key trend line support. I would suggest to you that the upside is limited to the 78, 79 area. It's at 77.65, down 22 cents. Boy, if it breaks 77, it's in real trouble. And I think it will break 77, the IYR. That's a shame. Okay, so now I want you to know a couple of other things. Yeah, J&J and P&G, we'll look at those when I get back. Basil Chapman, Tiger Technicians Hour, and we'll be back. Oh, nice little pop. How's it about? S&P's down 1. What an interesting market this is. Tough.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet, this puzzle can be solved in 20 moves. Knowing the right move makes all the difference in the world, and on Wednesday, May 17th at 5:30 p.m., I'll share with you the 5 essential patterns for timing the market so that you can make the right moves and become a better trader and investor. A few weeks back, I showed you how to spot a bear market with 2 moves that the market always makes, and on Wednesday, I'll unlock the 5 best moves for timing any market for any time frame. To gain access to this extraordinary 1-hour workshop, test drive my newsletter service, Mastering Probability, for the next 30 days for free. Just visit the homepage at TFNN.com and click on the link, 5 Essential Patterns for Timing the Market. And you'll be able to attend live as well as review this workshop anytime during the next 30 days. I'm looking forward to helping you solve the puzzle of the markets, and I'll see you on Wednesday, May 17th. TFNN.com. We've got your back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, Basil Chapman, 9130, 9138. This is looking at Cintas Corporation, CTAS, overalls, clothing rentals. If we're thinking recession, and during the, I can't even remember, did we talk about this? So Fletcher and the Den said, retail in tank along with autos piling up on lots equals economic slowdown, question mark. And I said, Fletch, I don't know how a recession can be avoided at this rate. It is the timing that is key and the duration. He says, yep, I was just thinking retail and autos is a huge chunk of the economy to be in a slowdown at this point. So let's try to put this together. If I put it together with Cintas, which is overalls clothing, my contention is that, and now I can answer the question about the Dow and the S&P. Well, what about this divergence? One went to a slightly new high, the other one's still way underneath. My thinking here is that, in a sense, there's been a slowdown, but it's cyclical, it is rotational. And that Cintas is telling me that for the past couple of months, we've actually been in some kind of a slowdown. That's shown up in the price, 128.85 on the 23rd of March. and here it is the 16th of May, and it's down the 122 area. No big deal, 6.5%. What's the big deal? Well, the big deal is that it is in many cases I've treated it for years, decades, as an economic barometer. Oh, taking calls. Yes, of course. George in New York, you were covered by another picture right here. Hi, George. You wanted to look at?
Basil, how are you today?
I'm good. So we've got
we
just
only
a
have
minute.
a few minutes left. We may have to go over this tomorrow, but it was NVIDIA.
Yes, so NVIDIA's trading 134.61. I was completely wrong. It made a peak F, and it made a peak E, and weekly F, and a monthly E, and then it held steady, and then the news came out, and the news was obviously spectacular. Now it's in a leg D at 134.69. It's very overbought technically, but that doesn't mean to say it has to pull back. My eye says, based on the weekly chart, that I think over the coming week and a half, it's going to give us an opportunity to assess what exactly to do, because I know you were in it. I think you got out of it a little early. Maybe I hope I wasn't responsible for that.
That's what I was trying. I say because I wanted to see where my mistakes were.
Okay, so you know what? Let's do that. Tomorrow is we can do it tomorrow. We'll have a little technical Wednesday. Call me tomorrow after. Call me tomorrow. Let's make it real quick as I start the show. I'll just do a quick preamble as to what I'm looking at, and then let's go into NVIDIA, and I'll tell you why.
I'd
like to do it.
Yeah, because I'd like an education on where I made a mistake on getting out.
And I too would like to look at that, as well as the fact that it is part of the SMHs, and until NVIDIA really starts to pull back seriously, I don't think you will get a sustained move in the SMHs to the downside. So let's look at it and see what are the parameters. What could hold it up, and what price points are we looking at, and where would you think of getting back in if it was looking out from the monthly chart as very positive? We'll do that. Okay, George.
Wonderful. Talk to you tomorrow.
Thanks.
Be well.
Very good. Sorry to have held on so long, but we will do it tomorrow.
No problem.
So folks, let's just do this, because the Dow is showing, this market, it's as if the mantra is buy the dips, and you have not been wrong to be buying the dips. But look at the way it hit that resistance point that I showed my subscribers this morning. The Chapman Wave falling axe, and I thought I made it bigger. Oh, I made it thicker right here. There it is. Daily. The 120-minute chart there. On the 120-minute, you see the thick dashed lines, Chapman Wave falling axe formation. I said that's the resistance right there at 21,020s. It hit 21,028. Pull back, but look at this candle trying to form right now. So we're going to be watching this real closely. All I can say is this is the ever-ready bunny. It just keeps wanting to purr right along. I don't know. I'm going to stay with my technicals, and I think that the Dow is lagging as part of the cyclicals, and we will be looking to see what happens at the close today. Watch the VIX and watch the Dow closely. I'll be back later on with Tom O'Brien. Have a great day. See you tomorrow, otherwise.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.